Today I'm interviewing Tarek, founder and CEO of Kalshi. Kalshi is the first fully regulated prediction market in the US. I think the biggest winner of the most recent election wasn't a candidate, it was prediction markets.
We believe prediction markets are the next wave of financial markets.
The elections helped propel Kalshi to #1 in the App Store, and they drove $1.4 billion of volume in just a couple of weeks.
On election day, for example, or on election week, we actually had the most volume.
The company went from 5 years of incredibly hard work building, including recently suing a regulator and winning.
It was a very bold decision because, suing your regulator is a very hardcore anti-pattern.
To becoming a, quote, overnight success. We're at a really important moment for this country where people don't trust the mainstream media, they don't trust social media, and they certainly don't trust politicians. So where can you turn to find reliable information? Prediction markets are going to be a big part of the answer. So Tarek, it's great to have you back on the program after a couple of years.
I'm very excited to be back. Excited to chat.
So catch me up. Why do you think now more than ever we need prediction markets in the first place?
Yeah, I think that's a great question. I would say in some ways, we've always looked for mechanisms for truth. I think the issue in the last 10 years is weaponization of truth, or maybe lack of truth, that has been going on, like news organizations, media, TV. And in some respects, social media has been getting more polarized. And I think people are really resonating now with the sort of money on the line, wisdom of the crowd, sourced truth. And that's really what prediction markets are about. And so they're answering a need that I think is sort of increasingly less fulfilled elsewhere.
Yeah. And talk us through what it's looked like for people to realize that en masse during the presidential election.
Yeah. So a little bit of sort of background on the elections. We were the first legal prediction market and regulated prediction market in the US. We legalized prediction markets first. Then there was kind of this whole debate with the regulator about whether we can list elections. We actually sued the regulator over this because for us, from the beginning, the ethos was like, look, one, we believe prediction markets are the next wave of financial markets. There's a variety of reasons for that. We can talk about that. And two, we believe financial markets need to be done. And I think you and I had talked about this before. They have to be trust, safety, regulation up front. I have yet to see a version of a financial market that has matured by being sort of in the shadows, and the reason is very simple, is you're handling people's money. A lot of things can go wrong. And so trust and safety up front, so that we're we're always going to do things the right way and legally. So we sued the regulator because we disagree with their legal interpretation.
And the regulator being the CFTC.
The CFTC. And we felt like the decision was politically motivated. And so, now a lot of people are waking up to kind of concepts like jawboning or regulatory oversight. We've been dealing with that for years. We've suffered the most egregious forms of all of that. But we sued and we're let's let the court decide. It was a very bold decision because, suing your regulator is a very hardcore anti-pattern. It just feels like the wrong thing to do.
Absolutely. I was not optimistic when I heard you guys had launched the suit.
No one was. I was talking to Jeff Yass from Suing. He's like he thought it was a less than 1% chance event. But we believed that we were right. And I think sometimes you just have to follow through your conviction, even though everybody's saying this is not going to work.
Yeah.
And we won. There was a huge, huge win. And it's the first time.
It was a huge win, and the timing was huge. When
the timing was also huge. It was, it's a little bit tight. And I'll talk a little bit about the timing. But we legalized election markets for the first time in the U.S. history. Basically, now you can finally take a position as a U.S. citizen on the U.S. election and other elections. And then we basically proceeded to launch. There was a bunch of issues like launching. Our old clearinghouse did not want to launch the market, but we were fortunate enough that we've been working on our own clearinghouse, which is actually the biggest thing that happened that month. We got a clearinghouse now.
Yeah.
So we own the full vertical thing. So we had to replicate Kalshi, launched a new one. People had to do a new account, a bunch of deposit issues.
Yep.
But we launched and everything went parabolic. And actually some stats. So we were actually the largest if you kind of took on a per unit of time. So there were kind of offshore unregulated competitors that launched it in January. But if you look at on election day, for example, or on election week, we actually had the most volume. And we ended up trading around 1.4 billion. And this is including all the clearing issues. And then we have to shut off deposits for regulatory reserves. So you could not deposit on Kalshi in the last few days for most people. So we took around 10% of what we could have taken. And we ended up actually being sort of the largest election market. And I think what the election market did, other than the volume.
I think Robinhood disclosed their volume at around 500 million.
I think ours was close to 1.4 in kind of aggregate election markets.
Yeah.
And kind of some of the unregulated competitors, probably it's hard to account for volume. It's a bunch of wash and unnatural volume. But But even on election night, we did actually more volume, accounting for the wash and others. And we had the most customers. So we've onboarded, now we're kind of got more than 2 million kind of downloads and, a bunch of other things. But what it did actually most importantly is it sort of conditioned people to the notion of checking the markets and the market odds. And it's hard because with new financial, you have to understand them. You have to understand what this chart is showing, etc. Election had so much demand, so much pull that it transcended the difficulty of setting up an account or difficulty of getting educated about the odds, because it forces people to do all these actions. And now that they've done them, the election is done, but they're like back to, well, I want to know who's going to be the next Secretary of Defense. What am I going to do? Like go back to CNN or Fox? I'm not going to do that. Or polls. Well, there's not even polls for these types of markets. And even if there were, like, no one's going to look at polls anymore.
You sued the CFTC, you won. There's a new administration. Do you see a lot of regulatory barriers going forward for you?
I would say the way you put it, and I think you and I discussed, look, this is a very strong regulatory mode type company. Like we have a very strong regulatory mode. And I think it's because hard to acquire licenses we've done. It takes 3 to 5 years minimum. And it's hard to operate. First, they give you a short leash because you have to kind of get used to operating it and so on and so forth. But the way I'd put it is this. We don't look like the goal here is not to have a pro or against regulator. I think having a regulator that's kind of applying the law fairly and squarely is very important. I think any new type of innovation, if it doesn't have a sort of dissenting and skeptical voice, I think we should be very concerned. Like I think dissent and skepticism and debate is actually a very healthy way to actually promote things and make them succeed long term. And I'm all for that. I think the thing that got difficult in the last few years, it's not like regulatory barriers per se. It's a lot of the things that Mark Andreessen and Brian Armstrong talk about it. And I think Kalshi really, suffered a unique form of this. And I would say the most egregious one. It was just regulatory overstep. It's like, we don't like this, and thus this is the law. Versus this is the law and this is how we're going to apply it.
Or not even this is the law, but we're going to create pressure whereby effectively you can't operate.
Correct. It's like this indirect, either we're going to take forever to approve something, or we're going to if you're trying to get this one thing or doing this one thing, we're going to hurt you in other places. It's this game that I think is going to stop. And I think that's what's going to make it that's what's going to, I would say, make, I think, furthering the space and innovation more simple. And that's how the regulator becomes more amenable to innovation. All we want is applying the law fairly and squarely, rather than sort of having some sort of interpretation and debate about what we like and don't like.
Yeah. I think one way to unpack, you could get pushback. You could get pushback from politicians. You could get pushback from regulators. How do you not get that pushback? I think we could unpack maybe one of the biggest criticisms during the election was, you can't actually trust these markets. There's this French whale. Everything's mispriced. It's basically just one person trying to buy the election. So what is the actual story of the French whale? Because it's a pretty interesting one.
Yeah. So look, I think the first is I always say this, and it's kind of always important to kind of differentiate, right? There's sort of sometimes we conflate the asset class with an operator. And it happens, for example, with crypto, right? When FTX blew up, a lot of the reactions were FTX is bad and crypto is bad. No. It's just not you gotta, Coinbase has never been bad. They've done things amazingly well.
Yeah.
And that's why they're kind of this way. And I think there's a little bit of that here. Look, there are unregulated offshore operators in crypto and prediction markets. And some of them are doing things right. Some of them not really, but you can't really
We're not even going about the other operators, just talking about individuals buying into markets.
There's an important distinction here to draw because yes, because you're mentioning the French whale, people are saying the market were being manipulated to kind of artificially improve, move odds up. And my point is any financial instrument can be manipulated. It's all about how you're offering it. And we've built systems over years that that thing would be flagged immediately. And we would figure out, well, if this manipulation or is this genuine trading?
Yeah.
I think actually the French whale thing seemed to be genuine trading. The dude actually it was market.
He did his own polling. He spent millions doing his own polling, doing neighbor polling, which is kind of different from how Gallup operates. And then he got to conviction. So it was not a story of manipulation so much as someone buying good information and moving a market with that information that was not generally publicly available.
I think that was exactly, and the beauty of it is it's exactly what markets are supposed to do is incentivize people to go out and bring in novel and new information to markets, which polls didn't do. And I think that's actually in some ways markets operating exactly like how they're supposed to operate, right?
Absolutely.
Frankly, I will say one thing: the media I'm a very strong believer in incentives. So I think at the beginning media was very kind of against because
Yeah.
in some ways it's replacing them.
You kind of see some of those people when you're doing these interviews doing that calculus. You're like, do we need to talk about this then or not?
Yeah, it's exactly
Yeah.
this. I mean, it's exactly right. And then after that,
Yeah.
when Trump won and this kind of this moment where prediction markets were right, I think a lot of media kind of was reaching out to kind of cover
Yeah.
that story in a positive way. And I think people kind of like caught up to the wave, and that was an interesting story to tell. But I think there's a little bit of that conflict. The other thing, I mean, frankly, I think, and that was a little bit unfortunate. Like whenever the odds were up for either of the candidates, the other side, which is kind of like, you know, people don't want data that disproves what they believe, and vice versa. And so, and I hope that gets reduced over time. That's the thing that excites me about prediction markets is like over time, I think we might polarize the whole thing and get people to call. I mean, I was called within the span of a week, the full range of like a Mossad agent all the way to like an Egyptian billionaire, like a Jewish Mossad agent all the way to Muslim Egyptian billionaire. Obviously, I'm neither. I'm Christian Lebanese, born in the US. None of that matters though. It's like just the market odds moving, you know. And I think hopefully over time, all of that shrinks and people kind of really realize that all of this process doesn't need to be so much of a knife fight, and it could just be like, let's get informed about what's going on in the world and see, you know, everything is actually down the middle, more nuanced than people basically imagine. And prediction markets
absolutely part of that is time, but you know, prediction markets being truth-seeking machines, the best way to have better outcomes is to drive higher volumes. And you guys saw huge volumes during the election, but that's Super Bowl. So big question I have for you is like, what do you think about like, what are the next Super Bowl moments or the way to kind of keep this ball rolling? Although it's going to be spikier than just, you know, continued increase in engagement.
So our steady state volume now is higher than it was like close to a week before the election. So which was huge, which is still much bigger than it was, you know, a month before the election. So, and that says like we have critical mass now. So it all compounds, like more shareability, more retention, more markets, the whole thing, more liquidity. And liquidity is hard to build, but once you have it, it basically compounds in a positive direction.
Yeah.
And what I say is like, nothing is going to be as big as elections, just nothing. But you don't need that. You can have 100 micro elections or 1,000 micro elections. And if you add them all up, they get more volume per unit of time, per day, per month than the election. And I think that works. And that's how these markets hopefully will work over time. And that's what we're seeing currently on the platform. The other actually slightly counterintuitive thing, you don't need as many people as you expect to get accuracy. Like it does this thing and then it becomes more marginal afterwards. Like, and it's working right now. For example, like if you look at the cabinet nominations, like the markets are doing quite well. Like, you know, Matt Gaetz for a while, like was priced at like around 30% on Kalshi. And actually like, I mean, a lot of people, even in the admin, like thought that the odds were much higher, which is amazing. People that are actually on the inside were actually less right than the market. And you know, the market was nowhere near as big as the election. It was, you know, I think it did like a few tens of millions of dollars, which is pretty big actually, but still like, you know, a percentage point of the election. But if you think about it, it's pretty amazing. Like it was still doing a really good job, even better than some of the insiders. And usually the rule of thumb is like, with a few tens of thousands of dollars, the markets get pretty efficient actually. It's pretty awesome.
And that's another interesting thing is you spend more time with these markets. Not only do the public get more comfortable with them, but arbitragers who spend a lot of time observing them can look and be like, oh, we understand what volumes and what characteristics of what kinds of flows indicate the extent to which this is accurately pricing information or thinly traded. Yeah.
And then you see a lot of, I mean, we saw this election, we see the other markets, like people start arbitraging traditional financial markets and events. Because a lot of times actually how you trade, like at Citadel, you take a stock and you decompose it. You do a PCA, like you say Citadel is like Tesla stock is Elon factor, like plus, you know, number, like the quarterly earnings, how many vehicles they're going to sell, plus the broader market, plus a bunch of other stuff. And then you can basically like price each one of these independently, and then you can compare that price to the prediction market. So over time, people are trading between the two because maybe Tesla is underpricing or overpricing the probability of Elon leaving by the end of the year versus like what Kalshi is saying, which is like a 20%. And then you can basically arb those two and make money off of that. And that makes both markets more efficient actually, which is really cool. There's this sort of virtuous cyclical loop where the financial markets themselves get smarter, but also our prediction markets get smarter. So it's all about just having more money and more incentives for people to kind of bring out truth. And truth is a pretty good product to sell. I mean, people want truth, hopefully.
Yeah, totally. And, obviously there are competitors. I hope everyone does good work to bring about, truth-seeking machines in an age where we need it more than ever. What's next for Kalshi? Like, what are your big things you're focused on the next 3, 6, 12 months?
I think, look, I think we've kind of launch our market maker partnerships, and we've kind of extended our liquidity now. We're going to do more of those. And number two is we're going to launch our broker partnerships, and I think that's actually pretty close now. And number three is just expand our market offering. We want to touch a bunch of categories. We want to expand. I mean, even since our launch of our clearinghouse, we've actually listed more markets in October and November.
Yep.
Than since our existence. So that's how the acceleration. Like we've literally accelerated by a factor of 5 to 10x in terms of number of new markets, and that trajectory is going to keep going up. And we have a very heavy feature. Like kind of we think about the platform. Sort of now we have the exchange and clearinghouse. I think that enables us to really build a tech first, basically exchange ecosystem in the US for all financial markets. And that's a huge advantage because most clearinghouses, really we're one of 4 meaningful ones, and all the others, they've been built like decades, if not. CME has been built 200 years ago. That's really kind of when the clearinghouse started. It was more physical, but it moved digital over time. And so the idea of having we have a lot of features that I think we can basically now introduce at a much higher rate, and so better margin, being able to kind of take positions without putting all the money up front. We just launched interest payment methods, so now we can do crypto, credit cards, debit cards, and so on and so forth.
Yep.
So there's just like a lot more on the roadmap.
Yeah, no, there's a lot more to come. I feel like there's this sentiment that a lot of things around financial technology are like over and done. It's like, oh, maybe prediction markets have like already, like they're done, like they're several players, there's like nothing more. And then you talk to the people building and you realize like, man, we're like barely there, right? Like there's so much more work to do to see where volumes can be in the future, where usability can be in the future, like all of that stuff. And so I'm excited to see how this plays out.
I think the 3 to 5 technical infrastructure for the derivatives market, not even just prediction markets, I frankly think is at like 1 to 5% of where it can be. It's insane. And I hope to see more and more people enter the space, like build an exchange, get regulated, and just gonna push the boundaries over time. It's a bit like crypto. There's so much. We're really, really just getting started. So fintech better than anyone. Like, it's surprising. People always just it goes in waves. Like a few years ago, fintech is done, and it's a crazy statement. Like money movement is still very difficult. Doing basic money things are still insanely difficult, and there's all these regulatory hoops, and there's so much to do. I'm very excited about the next few years. It's gonna be awesome.
Me too. Well, thanks so much for coming on. Appreciate it.
Thanks, Rex. Thanks for having me.